You think you're trading, reading charts, analyzing setups, waiting for breakouts, but you're not doing the action. You're being acted upon. The market isn't a game. It's a machine. A living, breathing, blood-sucking machine that feeds on hope, miscalculations, and liquidity. Every trade you place feeds it voluntarily. It doesn't hate you. It doesn't know you. It runs its process. Input, digest, discard, and you are the input. But here's what they never told you. Once you see this machine for what it is, once you understand its hunger, you can stop being its food. You can become something else entirely. This isn't a metaphor to scare you. It's the blueprint no one gave you. Stop losses don't protect you. They reveal you. Volume spikes aren't signals. They're traps. Order books aren't transparent. They're smoke screens. The exchange, market makers, HFTs, they didn't just play the game. They built the machine you're caught inside. While you learned trend lines, someone else learned structure. While you watched candles, they watched order flow. While you bought breakouts, they prepared to eat the stop run. This has been happening for decades. The market isn't fair, random, or cruel. It's precise, efficient, indifferent. Welcome to Trading Psychology Stick. We decode systems, not signals. Quick disclaimer. Nothing here is financial advice. We're exploring market psychology and structure. Your trades, your responsibility. So, the question is simple. Are you the architect, or are you still just the appetizer? The market doesn't punish you, it digests you, bit by bit. A slip here, a stop loss there. You bleed slowly, thinking it's your fault. But what if you're just one of millions being processed mechanically by something far more intelligent than chaos? This isn't a battlefield or casino, it's digestion. The market is a machine that processes inputs, your trades, fears, indecision, and transforms them into someone else's profits, fills, escapes. According to ESMA data, 70 to 90% of retail CFD traders lose money. In India, SEBI found 93% of F&O traders lost an average of 2 lakh rupees over 3 years. That's not bad luck. That's systematic extraction. But here's the twist. Those who survive learn to think differently. Picture this. A new trader sees the perfect setup. Clean structure, RSI bouncing off 40, price consolidating below resistance. Textbook. He buys the breakout. 3 seconds later, slammed. Reverse wick. Stop triggered. Then price recovers and rockets without him. It feels personal, like the market wanted him gone. But it's not personal, it's structural. His entry and stop were mapped by the system's architecture. The exchange routes trades through matching engines, prioritizing certain behaviors. Market makers extract pricing inefficiencies. HFTs anticipate your reaction 1,000 times faster. All interconnected parts of a hungry machine. When you press buy, the machine hears new input detected. Your stop loss becomes a cluster to sweep. The machine operates on flows, probabilities, intention. Not logic, fairness, or hope. But once you realize this isn't intelligence versus intelligence, but system choreography, you see the exit route. You start seeing patterns in the hunger. Quick check. Ever felt the market moved against you personally? Comment targeted below. You're not alone or crazy. You're seeing the pattern, and seeing it is your first step to freedom. The machine has no feelings, only rules. Understand those rules, stop being meat. Become muscle, ligaments, synapses. But first, unlearn assumptions. This isn't about setups. It's about your position inside the process. Now, let's understand what the machine really drinks. Your blood. Its name is liquidity. And once you know how it flows, you control your bleeding. Section 2. Liquidity is the blood, and you're the donor. Liquidity sounds safe, like oil for gears. But it's not convenience, it's currency. In this machine, it's blood keeping the system alive. Where does it come from? You, your trade, your limit order, your desperation for the perfect price. That's what the system drinks with precision. Place a limit order, you donate. You think you're patient. But you're giving the machine a map. It sees where you'll buy, where others sell, calculates extraction routes. You're now a donor. But donors who understand the blood bank rules can choose when and how to give. The machine wants clusters, crowd behavior. That's where the largest blood pools exist. It seeks psychological pressure points, round numbers, key levels, breakout zones. Predictability creates dense liquidity. Dense liquidity means feast. Price approaches resistance. Retail traders load sell orders. Shorts enter. Stops pile behind. You see a wall. The machine sees a buffet. It breaks through, triggers stops, then reverses. That wasn't random or fake. That was a full meal. I once watched a trader place stops exactly 5 pips below every support. Safety buffer, he said. Market would wick down 5.1 pips, grab his stop, rocket up. Every time. He thought unlucky. I said predictable. But when he started placing stops at 3 pips and 7 pips randomly, his survival rate jumped 40%. The machine loves predictable. Break the pattern, break the digestion. Even when you think you're smart, sniping entries, hiding stops, you're leaking data. Every action tells the machine something. Your behavior becomes fuel, but behavior can be camouflaged. Stop donating without intention. Stop trading levels because everyone does. Ask, who needs this break? Who's on the other side? What does the machine want? Think structurally, stop being blood. Start reading flow. Start choosing when to bleed. Flow has shape. Patterns live inside something traders never understand, the order book. Once we decode it, you'll see both the trap and the escape route. Section 3, the digestive trap of the order book. The order book, that window of bids and asks proving transparency. But it's not a window, it's a hall of mirrors. If you think it's real, neutral, or useful, you're trapped. But traps can be turned into tools. The order book shows limit orders, intentions to buy or sell. You look for imbalance. Bid stacking means buyers strong. Thin asks mean breakout coming. But the book isn't truth, it's bait, and bait tells you where the fisherman stands. Most orders aren't meant to be filled, they're meant to be seen. Spoofing, placing large orders without execution intent, is rampant. Flash orders appear and disappear in microseconds, probing liquidity. Imagine a digestive tract rearranging every second to confuse you. That's the order book. Not appetite display, but illusion stage. You're not observer, but observed. React to what you see, and the system adapts. Roots you, matches you, swallows you. Picture buy orders stacking. Price hovers above. You interpret support, go long, orders vanish, price dumps, you're trapped. The wall was fake, built to make you commit, torn down once you bid. But here's the power. Once you know walls are fake, you stop leaning on them. You start looking for the wall builders. Where are they really positioning? What do they want you to see? The illusion becomes intelligence when you flip perspective. Pause. Think about your last trades. How many were influenced by order book walls that disappeared when needed? You're seeing the illusion. Now use it. Watch for fake walls. Trade the opposite. The magician's trick loses power when you know the method. The book is alive, reactive, self-optimizing. It adapts faster than you. Yet traders rely on it because it's addictive, gives illusion of insight. But real insight comes from seeing through illusions. There's one more layer, deeper than visible orders, where real traps are laid, stop losses. But also where your greatest protection lives, if you know how to place it. Section 4, stop loss. Equals auto-digestion, or armor. Stop loss sounds like protection, a safety net. But what if it's also a spotlight tagging you for removal? In the machine, stops aren't private. They're data, opportunity, scent. But scent can be masked. You set a stop just below support. Textbook risk-reward. Feels secure. But when price drops there, it slices through, grabs hundreds more stops, then reverses. You feel betrayed. The market knew, because it did. Stop hunting isn't paranoia, it's protocol. Your stop is a cluster, magnetic field. Spike in the flow map, algorithms find and consume. You're not placing boundaries, you're contributing to harvest points. Unless you learn disguise. Everyone was taught the same. Stops below support, above resistance. The crowd breathes together. Stops stack. The machine inhales at once. But what if you breathe differently? Liquidity providers and institutional algos route based on stop density models. They scan, execute sweeps, trigger liquidations, reverse positions in seconds. You thought responsible. You were delicious, until you weren't. Tomorrow, before placing a stop, ask, where would everyone else put theirs? Don't put yours there. Try a logical placement that still protects capital. Behind the obvious hunt zones. In the no man's land, where algorithms don't bother scanning. Watch your survival rate transform. Stop asking, where do I protect myself? Ask, where does the machine want me? Structure-aware traders don't just avoid traps. They set decoys. They place tiny orders at obvious stops. Real protection elsewhere. Use the machine's hunger against it. The stop loss becomes armor when placed consciously. Not where it should be, but where it shouldn't be found. Next, we decode the nervous system. The reflexes, spasms, signals you misinterpret as price. They're not price, they're intention. And intention can be read before it acts. Section 5. You're not trading price, you're responding to nerve signals. Price is skin, surface flicker on your screen. Beneath pulses something else. Intention. Markets don't move from patterns but decisions creating pressure, not price. Can't read pressure? You're not trading. You're twitching like a muscle without brain. But muscles can learn. You see stalled price, interpret indecision. See bullish engulfing, interpret strength. But you're seeing action residue, the echo. Price is symptom, not source. To trade price is chasing footprints instead of the runner, but footprints tell you direction. Watch a tight range, low volume, wicks everywhere. Sudden jab down, wick, bounce. Should you long? Something aggressive in that formation. Velocity, intent. Not random, but machine reflex. A probe testing elasticity. Now it has answers, and so do you. That wasn't price discovery, but behavioral analysis. The machine reaching out, firing signals, seeing what contracts, reading you while you reveal yourself. But two can play this game. You can reverse this. Stop fixating on numbers. Start watching reactions. Trade like a structural organ. See how price flinches, levels respond, volume dilates when shocked. Feel flow, don't forecast. Your entries become strange, not logical or textbook, but right. You're intercepting intention. Best trade I witnessed. Colleague went long Bitcoin during apparent breakdown. Everyone thought insane. He said, watch how aggressively they push down. That's not selling, that's manufacturing. 2 hours later, Bitcoin exploded. He read desperation, not charts. You can too. Pattern trading dies in volatile markets. Patterns are static. Intention is dynamic, flexible, deceptive. Can't read lies, can't survive. But lies have tells. Desperation has signature. Fear smells different than confidence. How often do confirmed breakouts whipsaw you instantly? Not bad luck. You mistook surface tension for internal flow. Read skin while the system moved muscles. But now you're learning anatomy. Once you see price as behavior, not truth, you notice what the market wants, where it needs maximum consumption. And this leads to understanding why some always win while others always feed. Markets aren't fair because machines aren't symmetric, built for some to win, many to feed. But asymmetry once seen becomes opportunity. Section 6. Asymmetry equals genetic design and your edge. The machine isn't broken or rigged how you think. It's elegant and dangerous. Not meant to be fair, but to survive. Survival requires asymmetry. Structural imbalance, letting certain players feed, while others are fed upon. Not a flaw. Genetics. Market DNA designed for efficiency, not equal opportunity. But DNA can be hacked. Asymmetry exists everywhere. Access, speed, data, influence. Latency. Institutions co-locate servers inside exchanges. Orders travel shorter distances. Retail waits 300 milliseconds. Co-located react in 3. Physical asymmetry. They act before your decision reaches the pipe. But speed isn't everything. By 2024, HFT accounts for 50+% of U.S. equity trades, 60% of futures. The HFT market worth $10+ billion, growing 12% annually. Not traders, but extraction engines at microsecond speeds. But engines have blind spots. Information asymmetry. Level 2 data. Order flow models, dark pool prints, the hidden neural network, not free or public. Priced for those who matter, but patterns leak, footprints show, the informed leave traces. Even incentives asymmetric. Market makers paid to add liquidity. Profit before price moves. You need direction. They need your entry. You sprint mazes. They operate toll booths. But toll roads can be avoided. Pause. Breathe. Feels overwhelming. Like impossible game. It's not. Gazelles know lions are faster, stronger. Do they quit? They adapt, learn patterns, develop strategies. Asymmetry is real, but not absolute. David beat Goliath by changing the game. Psychological asymmetry costs most. You think you choose and analyze, but behavior is predictable. Pain points, stop sizes, FOMO moments. Known, coded into models shaping system response. But predictability can be weaponized. Be so predictable, you're unpredictable. This isn't about rage or demanding fairness. It's awareness. Don't need to be fastest, richest, or most informed. Just need to stop playing their game. Start playing yours. Use their assumptions against them. That's where asymmetry becomes power. See it, name it, sidestep jaws. Turn their strength into weakness. Speed means rigidity. Size means visibility. Power means predictability. Now let's see what processes you. The stomach. The exchange. Section 7. Exchanges are the stomachs that need you. You've felt the teeth. Meet the gut. The exchange. Not neutral middleman or matching engine. It's the machine's stomach, churning, processing, deciding who's digested first. Doesn't exist to help you, exists because of you, and that need is your leverage. Exchanges seem simple, match buyers and sellers, but they are appetite creatures. They don't just process trades, but monetize how you trade. Order types, routes, speed, sequence, all become food for profit extraction. But stomachs need constant feeding. You click market buy, thinking best price. But orders get split, redirected, delayed microseconds, filled across venues. Your trade isn't transaction, but opportunity packet. Exchanges sell order flow. Payment for order flow is digestion protocol. Your urgency, their margin. But what if you weren't urgent? Many exchanges pay market makers for limit orders. They get paid to sit still while you pay to move. Your market order hits their liquidity. They collect spread. Exchange pays them again, but patience pays too. Collocation means sub-millisecond advantages. They see order book shifts before you blink, digest intent before you act. Exchange profits offering this privilege. But not all battles need speed. Exchanges thrive on volume, not quality or intelligence, just quantity. More clicks, more food. So they gamify, advertise tight spreads, reward speed. Your engagement is glucose, but fasting is powerful. Uncomfortable truth. Exchanges profit more from failed traders. They trade more, revenge trade, overtrade, generate volume without profit extraction. But conscious traders trade less, profit more. Quality beats quantity. Most think exchange is the machine, understand exchange rules, understand system. But exchange is just organ, stomach, converter. Doesn't set rules, enforces digestion. And every stomach has foods it can't digest. Next time you trade, ask, who digests this first? Who profits from my urgency? Then ask, how can I be the bone, not the meat? You're not alone in this machine. Others move differently. Silent, invisible, deadly, the viruses, stealth traders. But viruses can be symbiotic. Section 8. Market makers. Equal immune system that you can befriend. Every organism has defense mechanisms. The market's immune system, market makers. Not just liquidity providers filling gaps. They're the immune response. Their job isn't just keeping markets liquid but alive. That means eliminating inefficiency, risk, and you when predictable. But immune systems can be trained. Market makers don't care about your analysis or direction. Their edge is flow. Profit from spread, speed, reaction. See orders before you. Feel pressure building. Sense imbalance. Respond with code. But codes can be learned. You see bullish setup. Resistance tested. Volume rising. Enter thinking ahead of curve. But your order plus thousands like it triggers immune response. Market makers don't just absorb. They offset, hedge, reverse. Not because you're wrong, but for system balance. Work with balance, not against it. Price stalls exactly where retail expects breakouts, because you're pressing machine nerves. Too many pile in, system reacts like immune cells to virus. But what if you weren't the virus? What if you were the vitamin? Market makers are layered, some passive, others high-frequency nanosecond monsters, some on exchanges, others in dark pools. All smooth the machine, eliminate behavior spikes. but smooth operators need rough patches to smooth. Friend at trading firm said, "We don't predict markets, we count cards." When everyone bets red, they accumulate black, not knowing outcomes but providing balance. You can count too. When everyone's left, consider right. Your survival depends on visibility understanding. Enter where everyone does, place obvious stops, move predictably. You trigger the swallowing reflex, but move differently, survive differently. Not about hiding, but structure shifting. Ghost movement. Learning when not to enter. When providing liquidity serves you. When taking it makes sense. Dance with the immune system, don't fight it. The immune system isn't evil, it's efficient. Understand its job, help it sometimes, and it helps you. Symbiosis beats parasitism. Master execution layer next. Not just where, but how you enter determines detection speed and profit probability. Section 9, the enzymes of execution, your signature move. Digestion starts with enzymes, microscopic agents breaking down food, identifying structure for absorption. Your execution is the market enzyme. Most don't realize they're feeding the system in its easiest digest form, but enzymes can be selective. Execution seems technical: buy, sell, market, limit, done. But every choice sends more than signal, sends signature, tags you, desperate or patient, informed or guessing, emotional or calculated. As signatures can be forged, market orders, fast, direct, aggressive, like shouting, "Feed me anything now." Machine loves urgency, but sometimes urgency is strength, sometimes patience is weakness. Context determines digestion. Limit orders seem safer, but they're visible, exposed, adding to liquidity pools. Sometimes visibility is vulnerability. Sometimes it's power. Knowing when makes the difference. Iceberg orders show partial size, rest hidden, clever until algorithms detect fragmentation. But fragmentation can be intentional misdirection. Show small, think big. Show big, act small. Order splitting reveals patterns. But patterns can lie. Split differently each time. Use Fibonacci, use random, use intuition. Become unpredictable by being systematically unsystematic. Experiment. Next trade, flip 3 coins. Heads, heads, heads. Market order full size. Tails, tails, tails. Limit order 10% size. Everything else, create your own rule. Watch how different combinations change outcomes. Build your execution signature. Execution isn't trade end, but exposure start. Not just entering, but declaring. Make declarations that confuse. Mix signals. Be the enzyme that sometimes digests, sometimes builds. Adapt. Become unpredictable. Randomize with purpose. Sometimes take, sometimes make. Sometimes loud, sometimes silent. Refuse consistent flavor. The system can't digest what it can't categorize. That's where stealth begins. Not hiding intent, but multiplying possible intents. The best are everywhere and nowhere. Quantum traders. Section 10. Stealth traders. Equal viruses. Study them. Viruses enter silently. No banners or noise. Slip in, replicate invisibly. Alter hosts without alarms. Stealth traders are market viruses. Don't fight systems, live within them. While retail screams for confirmation, they've executed. Quiet, surgical, gone, but they leave lessons. You've seen footprints, odd candles spiking both ways, closing flat, liquidity zones vanishing before price arrival, breakouts barely breaking yet, flooding movement. Not accidents, but shadows. Learn to read shadows. Stealth traders use time, not size. Shape price, don't chase. Break large orders down. Hundreds become tens, become ones. Slice, scatter, route through venues. But more importantly, they think in campaigns, not trades. Fund wants millions in position. Size kills edge through slippage. So algorithms study flow, predict liquidity pockets, slip unnoticed. Over hours, days, weeks. Position built, price barely moved. Be patient like viruses. While you await confirmation, stealth creates conditions you're waiting to see. Your breakout fires, they've exited. You enter as they leave. But what if you learned their timing? Ever see massive moves without news? Just explosive movement? Comment ghost move if witnessed. Those are stealth footprints. Study them. Time them. Find patterns in the patterns. Stealth traders are dangerous but educational. Don't fight machines. Learn from them. Their absence teaches more than presence. What didn't happen tells more than what did. Defense isn't defense, it's education. Stop assuming full pictures. Start seeing negative space, the unfilled level, the missing volume. That's stealth language. Learn it. Can't beat viruses, but can learn behavior. Can't be them, but can think like them. Trade less like flashlights, more like shadows with purpose. Even stealth faces one enemy, the force that turns positions into traps, adverse selection. But knowing it exists is half the immunity. Perfect setup, clean entry, everything aligns, yet instantly underwater. Not because markets moved, but moved against you knowingly. That's not paranoia, that's adverse selection. But diseases known can be treated. In autoimmune disorders, systems attack themselves. Adverse selection is market autoimmunity. System punishes participation. Follow rules, enter logically, get targeted for inferior information. But information asymmetry can be minimized. Brutal truth. If someone knows more on the trade's other side, you've already lost. Your trade didn't express opinion, but exposed weakness, like showing cards in poker. But what if you showed different cards? HFT algos see iceberg orders revealed piecemeal. Volume increases, you see strength, they see desperation, they front run. But icebergs can be decoys, real positions elsewhere. It's positioning. Funds unwind positions silently. Structure looks weak, you short. Your size is noise and planned unwinds. But understanding the unwind schedule helps. Watch for patterns. Quarterly rebalancing. Options expiry. Known events create unknown opportunities. Dark pools execute secretly. FINRA shows 15% of U.S. stocks trade dark. Some stocks over 50% off exchange. You trade echoes. But echoes have origins. Trace them. Like poker where everyone sees your cards, but you see only some of theirs. Not playing same game. So, change games. If they see your cards, show cards that don't matter. Keep real hand hidden. Adverse selection. Wrong place, wrong time, wrong lens. But mostly wrong assumptions. Assume you're outgunned. Trade like it. Use their confidence against them. Not hopeless, but educational. Shift perspective. Stop seeing isolated trades. See campaigns. Let systems reveal before committing. Be the adverse selection sometimes. One more battleground where speed kills, but also where patience pays. The Q war. Where milliseconds matter, but wisdom wins. Section 12. The Q war equals microtubule battlefield. Choose your battles. Q looks simple. Place limit order, wait in line, get filled at your level. Fair, predictable. But this isn't bakery lines. It's molecular battlefield. Microsecond war. Position differences between first and third aren't profit but extinction, unless you fight different wars. The order book is living chains waiting to be touched, filled, skipped. Further back means less likely fills. Your Q position determined by price, time, venue, order type, entry speed. In that lag, predators feast. Or do they? You think you're book top, but while received, processed, routed, thousands beat you. HFTs, co-located bots jumped nanoseconds faster. Your edge became back of line. But what if you never wanted front? Not inefficiency, but design. Machine rewards speed because speed is predictable advantage. But predictability is vulnerability. Sometimes back of line is exactly where you want to be. Let others trigger moves. You catch waves. Q jumping through hidden order types exists. Not cheating, but optimizing. But optimization has cost, complexity, rigidity, predictability. Simple sometimes beats complex. You feel trades almost worked. Right level, right time, never filled. Others moved, but almost is information. Almost tells you where pressure builds. Use almost as intelligence. Reality check. From liquidity to stops, order books to Qs. Feels impossible? Remember, not every battle needs winning. Choose battles that matter. Let speed demons have their game. You play different game. Fight back? Stop winning with speed. Change engagement locations. Seek levels others avoid. Enter during imbalance, not obvious moments. Place orders where nobody wants. Ghost fills appear. Machine rewards hustle, sometimes. Also rewards patience. Rewards speed, sometimes. also rewards position. Find your edge. It's not where others look. Perfect placement and execution can't prevent the final trap, the behavioral loop that catches most. But loops recognized can be broken. Section 13, the noise trader. Loop, your graduation test. Wake up. Open app, scroll charts, see movement, take trade, feel rush, stop hit, frustrated, repeat tomorrow. The noise trader loop. But loops are just patterns, and patterns can be broken. Not just cycle, but system feature. Machine doesn't tolerate noise traders, depends on them. Their engagement feeds everything. Without them, no volatility, no food. But being food is choice, not destiny. Noise traders don't know their noise. Believe they apply logic, use indicators, follow news. But core behaviors reveal them. Contextless entries, movement chasing, emotional reaction. Need expressed as trading. Start subtle, win trades, confidence builds, risk increases, losses come, switch strategies, new indicators, new mentors. But changing tools without changing behavior is like changing clothes while staying dirty. Noise trader sees Bitcoin pushing resistance, breaking out. Longs, stopped, flips short, stopped, revenge trades, logic gone, machine just waits. Not market but echo chamber. Secret, loudest traders are hungriest. Not for profit but action. Need movement to feel alive. But markets don't entertain. They transfer wealth from impatient to patient. Are you entertainment seeking or wealth building? Hidden danger, loop feels productive. Trading, active, learning, no. Repeating mistakes with fresh paint. Growth isn't activity, it's evolution. Escape, break rhythm, trade less, watch more. Best traders spend 90% waiting, not watching, waiting for structure, signal, opportunity. Move with purpose, not compulsion. Stop thinking like candle chaser. Think like ecosystem participant. If trades don't create or exploit imbalance, they don't belong. Participating isn't trading, extracting is. The noise loop isn't just behavior, but identity. And identities change only through transformation. Ready to transform? Then see the blueprint. Section 14. The system is closed until you see the blueprint. Keep thinking you'll discover secrets. With effort, unlock what others miss. Truth, system is closed. Finite, self-reinforcing. Optimized to feed on discovery. Every insight already absorbed, priced, weaponized. But that's not the end. It's the beginning. The house wrote the layout. You walk mazes designed infinite but ending circular, unless you stop walking their maze and start seeing it from above. Final illusion. Markets are open-ended puzzles. Effort leads to mastery. But you're inside digestive cycles. Until you step outside loops, always pray. So, step outside. Breaking out? See blueprints. Stop obsessing price. Study structure. Not, what's market doing? But why does system allow this trade? Every trade asks, where am I in flow? Input, friction, function. Think loops, systems, reflexes. See microsecond queue ecosystems, liquidity magnetism, market maker regulation, stealth engineering. Your participation isn't permitted, it's designed. But design understood becomes advantage. Realization lands. Strange things happen. Stop reacting. Slow down. Observe machine from outside, not above, but around. Notice rhythm, not randomness. No longer chase. Time, no longer place. Design. Feel pressure, not see candles. What changed everything? Stopped asking, how do I win? Asked, how does system win? Then asked, how do we both win? Market became less adversarial, more ecological. Essential understanding. Don't outsmart machines. Stop announcing yourself. Start being useful to the system while serving yourself. Trading looks lucky to others. Enter before moves. Exit before fades. But not magic. Structure, blueprint vision, moving like structural cell, not food. That's the shift. From food to function, from fuel to architecture, from victim to participant. But integration requires emotional evolution. Even seeing machines, temptation remains. Old patterns call. That's the final test. Section 15. Become a structural cell, not a consumable one. Every market part serves roles. Some transient, noise, fuel, vapor. Others persist. Walls, pressure transmitters, digestive supporters never digested, structural cells. Don't chase or scream. Built unremovable positions. Difference isn't intelligence, it's identity evolution. Becoming structural requires fantasy release. Won't beat machines by war, but can thrive through integration. Not fighting currents, but swimming so precisely you become current. Ever watch price move exactly as anticipated without you? Not failure, observation mastery. Structural thinking begins here. Cells don't chase, transmit, don't jump, flow. Structural traders seeing breakouts don't crowd enter. They wait, measure, test, detect loading or baiting. Enter when others' digestion begins. Ride imbalance professionally. When wrong, inevitable, they don't panic. They adapt. Capital isn't identity. Edge isn't prediction, but adaptation. Systems breathe. Losses aren't failure, but system friction. Cost of integration. Stop reacting to price. Interact with structure. Know the maps. Feel the flows. Read the rhythm. Become part of the music, not noise. Final thought? Markets aren't enemies, but ecosystems. Predators, prey, and symbionts exist. Goal isn't conquest, but integration. Become so essential they can't digest you. Architecture, not food. Secret: markets need structural traders. Like bodies need bones, machines need stability providers, stress absorbers, system coherence maintainers. That's your role. That's your edge. Step into that role. Markets stop feeling hostile. You've become part, not victim. Not guessing direction, but facilitating it. Not reaction, but function. Stop thinking like predator, prey, or trader. Think like system, adaptive, persistent, indigestible, essential. This is your evolution. From noise to signal, from food to structure, from traded to trader. You've seen inside, blood, nerves, stomach, machine. Something should feel different, not just informed but transformed. No longer seeing markets as prediction stages but as living systems. You have a choice. Forget what you saw, return to old patterns, chase obvious setups, place predictable stops, trade emotionally. The machine waits, always hungry. Or evolve. Rewire your approach. Think structurally. Ask better questions. Trade less, observe more. Feel the flow. Become invisible when needed, visible when useful. Most creators say like, comment, subscribe. I won't. This wasn't made for subscribers, but for evolvers. Instead, I ask, if this opened your eyes, if you see the machine differently now, comment, I see the machine now. If you've escaped the noise loop, share how. Not for glory, but for others still trapped. This isn't just a channel, but a tribe. For those who see deeper, who choose evolution over repetition, who become structure, not food. The market doesn't punish weakness. It digests predictability. Your immunity is evolution. Welcome to Trading Psychology Stick, where we don't fight markets. We evolve with them. We become what can't be digested. The machine is hungry. But you're no longer on the menu. You're part of the kitchen. Welcome to the other side.